What is going on, everybody? This is S Trades, and today's September 11th. And in today's video, I'm going to be doing a quick trade recap and just showing you guys a lot of the concepts that I use on a day-to-day basis. Today was a very perfect example of how my day-to-day trading would look like, and multiple concepts were used, bias was switched, and things like that, right? So without further ado, let's get straight into the video. So again, I usually just start making more trade recaps to specifically the ones that are very important, especially in terms of learning, because I still haven't finished the bootcamp. I have a few more videos to go, but these trade recaps are just meant to be like a supplementary kind of videos to just help you guys to understand all the concepts and things like that, right? So let's get straight into this trade recap. So if we just take a quick look at a higher time frame, right? So the way again I start all my days is literally just going up on my highest time frame on the 4 hour. So I go on the 4 hour and just kind of see where are we, what are we doing, right? So yesterday we had a little sell-off right into this 1 hour discounted fair value gap, right? And we had another discounted 15-minute below us, and then we ended up kind of getting a rejection off of it. And then today, pre-market, we were just kind of pumping up, disrespecting bearish PD rays and respecting bullish, right? This is the most important thing that I do just to determine my daily bias. If you guys haven't watched my daily bias video, I'll leave a link in the description. You guys could go ahead and watch that. But for the most part, it's literally me just looking at what are we respecting and disrespecting, and it's just simply fair value gaps and PD rays such as highs and lows, right? So as you guys could see, all of the bearish PD rays that are here are getting inverse, right? So this 1 hour that created in the London session got inversed, and then we ended up kind of getting displacement out of it, right? This high got displaced through, and then all of these bullish PD rays are getting respected, right? We swept London low, immediate reaction off of it, right? If you go on a 15-minute, right, all of these small 15-minute fair value gaps are all getting closed and inverse. So I am heading into the day bullish, right? But we had CPI today, right? So if you guys see this candle over here was the CPI candle, right? The CPI candle kind of ended up coming down lower, taking out London and Asia high and manipulating down into this discounted 15-minute fair value gap, and I got an immediate reaction higher, right? So if I just go on the 1 minute, right, the first thing I would do when I see these big news candle, I would mark the high and the low as a data high and data low. In this case, data high already got taken, right? So going into the open, I was necessarily bearish, but I did want to see the data low get taken out first, right? Because obviously we are, leaving a data low is a very obvious draw on liquidity. So this is kind of what I wanted to see at first, right? So we had market open, right? We manipulated higher, and we ended up inversing this 5 minute. I did want to take this play, but it just inversed super low, and the risk to reward would be absolutely horrendous. 64-point loss if I would have lost on that, which this was a loss, right? So this 5 minute inverse, and I thought that we would kind of come down lower, taking out this data low, but we did not, right? Once we got that level taken out, you could scale down and take this 2 minute inversion right down to the data low. You could go break even after this internal got taken, and this was unfortunately a probably break even trade if you guys did take it, right? I did not take it, but because I was not on my computer that time, I was in class. Very unfortunate, I know. So then, right after kind of seeing this price action play out, we see that this bearish 5 minute ended up getting closed above, right? So we see that this 5 minute ended up getting closed above, kind of pushed up higher, came back down to another discounted. So this discounted 5 minute, right? If I want to see price be bearish and come down to the lows, I want to see this discounted 5 minute get closed below, and that would kind of confirm for us going lower. We did not do that. We respected that 5 minute, and right immediately we inversed the bearish 5 minute. So in my head, I'm like, all right, we might be still bullish, right? We might kind of want to push up higher. And then this time, ES was already at all-time high, so we could have easily just kept pumping higher, right? So although I wanted the data low to get taken out, I did not want to marry that bias, because if I'm just sticking to one bias and not adjusting to what the market is showing me, I'm not a trader. Like, that's what a trader has to do. It has to adjust to what the market is showing them and not necessarily try to force your own will to it. So this is kind of what happened in this scenario, right? We ended up kind of inversing this 5 minute, coming down lower, again pumping up higher, taking out this high again with a lot of displacement. So then we ended up creating this discounted 5 minute, right? So this was kind of my condition, right? I'm like, this is potentially could be the power of 3 when the high gets taken out 3 times. It's just a concept in ICT. I was like, this is the last high that I want to see get taken out. If we are truly bearish, this 5 minutes should get inverse and probably send us lower to take out all of this low resistance liquidity. Or if we are bearish and we want to see previous day high and previous day data high, which was on Wednesday with that PPI candle, right? Because it was still left on NQ. So I was like, it's either that or the other, right? So this is me just setting a condition on my trading day, right? So if one happens, I do that, and if this happens, I do this, right? So this is literally one of the most important things that you guys should be doing, right? Is setting conditions, right? Because you would kind of eliminate the whole guessing game. You don't have to sit there and guess, be like, well, what would I do if this happens? What would I do? So you just simply set a condition, right? In this case, I was like, all right, if we're bearish, this 5 minute needs to get closed below and maybe some sort of a lower time frame entrance and then take that short down here. Or if we are bullish, because price constantly keep on going higher, so you might be bullish until this high gets taken out, right? If you are bullish, I want to see this 5 minute get respected and some sort of a lower time frame inversion back to the upside, right? So this is exactly what happened here, and that's how I ended up taking that trade, right? So if we go down from a 5 minute down to the 1 minute, right? Because that's what I do in terms of my inversions. I take the highest time frame inversion of the leg, right? So in this leg, we tapped the 5 minute and we got an immediate wick up. So I'm like, okay, we might be possibly respect this 5 minute, right? So let me try to see if we could take a quick long up to this high, which was the data high and previous day high again, which is a very, very obvious draw on liquidity, right? So we can see that there's no 4 minute, right? There's no 3 minute, and there is a 2 minute, right? So this is what this line is, right? So this, I drew this line to kind of see my inversion, right? So the moment this 2 minute ends up getting closed above, I take my long, right? Setting my stop losses below this wick, and this would be my break even point, right? You could potentially even scale out fully if you want right here, but I was just super confident for this data high getting taken because it was a very, very obvious draw on liquidity that got left yesterday, right? So if you just go on a 1 minute just to see how price action was, it was pretty slow, right? We inversed that and we were just kind of crawling up here, right? So the moment we kind of broke this high, actually, I started trailing my stops over here because I was like, if we start to break this high, I do not want to risk anymore because we're literally right here at the high, and ES also took this level out. So I was like, all right, let me just start trailing. The moment we get this big inverse, big push up with a lot of displacement, I went break even on this trade and I just held it for another 2 minutes and then take profit got hit, right? So the most important thing I want you guys to take out from this lesson is adjusting to what the market is showing you, right? So if the market you think that was bearish on the day, which is kind of what I thought for the day, but it's showing you bullish signs, it's not necessarily that I'm just flipping my bias left and right every single time. No, but you could be wrong, and that's completely fine. You could be wrong in the bias because you do not, like, you have all the technicals that you need to kind of see and think where the price might go, but the market might have other plans, right? The market might have some other things that we are not sure of, which will potentially push the price higher or lower. That's not for us to decide, right? So if you see that your bias is getting disrespected and the bullish bias is not coming in and showing a lot of signs, you have to adjust to it and you have to flip your bias only in those scenarios where like it's very obvious, right? So it's not like just you see like a few 1 minute candles going up in the opposite direction, like, all right, I'm just gonna flip my bias down. No, like it has to be multiple higher time frame candles that are proving to you guys that, okay, my bias is wrong and the drawn liquidity currently is somewhere else but what I was thinking, right? So yeah, that's pretty much it for this video, right? This is a very, very clean trade on a very clean day. Well, I want to say clean day, but this is a very obvious trade right here. And, you know, now looking at this price action now, right, we took the previous day high and the previous data week high, right? I might potentially want to see all of this lower resistance get ran through, right? Maybe not today, probably tomorrow, because now we're probably just going to chop around, or maybe we can, you know, at 4 o'clock we'll just kind of dump and just take everything out. We still have the data low, right? So, and we have all this low resistance liquidity, right? So these are just the conditions that I'm setting myself and just keeping in mind for later. This is a very, very good generated liquidity that we have here and the data low. So potentially we could see some sort of a sell-off maybe tomorrow, right? So that's kind of just what I'm keeping in my mind. But again, if I'm starting to see price just push up super high, right, just constantly going higher and higher, respecting bullish P arrays, I wouldn't just stick to my bearish bias and be like, no, I want to see my data low get taken and we're like all the way up here, right? You know what I mean? So it's like, that's just very silly and that's not very responsive to the market, right? So And that's about it, guys. If you guys liked and learned something from this video, please put a thumbs up. And if you guys have any questions, comment down below. Make sure to join my free Discord where I live trade every day and I help traders out with my strategy, and I answer any questions or any confusion that some of the traders might have. Or if you want to just have like a one-on-one conversation or call with me, you could always just do that by joining my Discord. It's completely free. I don't charge anything, and I teach everything for free. So the link is going to be in the description, and I will see you guys in the next video.